Welcome everyone to another premium session. We'll just jump straight into the charts today. We won't muck around. So, jumping straight into the SPX this week, because we did break through the all-time high in the previous week, and when we saw the Nasdaq break through the all-time high, we pretty much saw an immediate pullback. But for 2024 for the SPX, we've seen follow through, which is good to see. It was quite a bullish close to the week for the SPX. We did leave a little bit of a gap from week to week, but that's fine because we're going to have a retrace at some point. But regardless, we're seeing this uptrend from back in the start of November, end of October. This has been quite persistent. We had one minor little pullback in at the start of the year, but it's on the grand scheme of things, it's really nothing. It's going up. We will get a pullback at some point. It might be in Feb. It's probably more likely going to be in March. March is typically a time when we have pullbacks in traditional finance. But in saying that, we have been going up for a considerable amount of time, so a pullback is going to be inevitable at some point. Where could a pullback land for us? I think we can say with a reasonable amount of certainty that this low here is unlikely to get broken for the remainder of this long-term cycle that we are in. I'd be fairly confident in saying that also this low here is not going to be broken. We have this low that was put in October, and I'm fairly confident, not as confident as this one here at 3,800 points, but I am still confident that this low here is going to hold itself. The only downfall that we have is that we did leave a gap, and I've got that with a little rectangle box showing there where the gap is. That's, for me, that's the only real thing that's leaving the door open on a potential retrace back down here. But in saying that, from where we are right now, that would mean almost a 20% retrace, which at this stage of the market it just doesn't happen. So that's the case for the bulls, I suppose, is that we are a long way off this low. And the gaps don't have to be filled. They typically do, but they don't have to be filled. So I'm going to leave that one for now, I think. I'm going to see how much higher we can run. If we start running up to around 5,100 points, something like that, I'll be pretty confident in saying that, no, we will not get down here. But where could we get to? So if we use 5,100 points as an example, if we get to there hypothetically, so the first key level that we could retrace to on a retrace will be around 4,600, which will coincide with the prior tops. We would also have to break back below the high, but that wouldn't be too difficult, I would imagine. There is confluence, though, at this 50% level. One, it being the 50% level and remaining above that level remains the short-term bullishness. We have this top here. We also have this little top here that was flipped to resistance back in March last year before we saw the onslaught down. In 2022, sorry. Failing that, we also have the golden pocket below at around 44.50. I'd say that would be a pretty healthy retrace. I probably wouldn't want to see it dropping much further than 44.50. it can, as long as this low here doesn't get broken. We can come down all the way down to 4,100. It's just going to be a bit too deep of a correction, in my opinion. Coming down to 4,600 is still a 10% correction from 5,100. And we start getting into around the 12-13% correction down to here. So I'd say my key level would be around that 4,600 points. Proven resistance hasn't been tested as support yet, so it'd be good to come down and get a nice spring off that level. We can jump into the Nasdaq now. So this is what I was referring to. When we popped through and made the all-time high in this week, we then saw a little pullback, nothing too serious, 5% or so, I guess. If we go from the top of 17 or almost 17,000 points, yeah, it was about 4% drop. But then we've sprung back up and poked back through. Nasdaq is looking strong. Tech stocks are always more volatile than the SPX. So this chart is looking quite bullish, quite good. We can go around the globe actually. We might have a look at the Aussie stocks, which we haven't really had much of a look at before. So the Aussie stocks are actually on the cusp of making an all-time high. They are fairly close. So all-time high sits at around 76.50, I believe. Yeah. 76.50. So less than 1% away from breaking through the all-time highs here. And they've had a massive consolidation period at the highs to get a little bit of a retrace, but they've been at this level for about 2.5 years, just under 2.5 years, trading in this range. Really like to see it start breaking out now and moving up. And following what's happening in the US, I suspect that will be the case. We'll jump into some UK stocks. Same thing with the UK stocks. They've been spending a lot of time in this high range. They did make an all-time high at the start of last year. And starting this year, going not too bad. Bit of a slow start, really. They had a pullback for a couple of weeks, but now we're starting to get some green candles. We had an engulfing bullish candle from last week. As we can see, it engulfs the entire body of the last candle. And it doesn't even really have a tail on the top. So that would suggest that this week's going to be a green week as well. A little bit further behind from the all-time high than what the Aussie stocks are. But nonetheless, it's less than 5% from it's about 5% from getting back to all-time high territory, which I think will come, no doubt, in my mind. Moving over to China. The China stocks is probably about as close as you're going to have as having a correlation to crypto. Like that, they're so much more volatile than the remainder of the traditional finance. But the pull, we've covered this off before, pulling back. We had this bottom back here in October 22. Hoping that this is looking at making a bit of a double bottom here. Did have a bit of a strong bounce. There was some news that come out in China how they're easing credit facilities and monetary policies. I think they had a 50-point rate cut, which is definitely going to help the free up liquidity and give some strength to stocks. And we'll jump into Bitcoin now. I'll go into this one. So we've had a bit of a wild week on Bitcoin. Went down as low as 38.5, and that filled a CME gap that was down there. It didn't really bounce off the level. It sort of consolidated. I'll show you that. So when as we're coming down, the high time frame 50% level was acting as support. Then it broke through, came back up, tested it, and it had flipped to resistance, and then the downtrend ensued. And as it came down, it did get down to 38,500, got a little bit of a bounce, and then had a bit of a consolidation period around the high 39K, 40K, around that mark. It wasn't a mad V recovery, it's just a little V recovery. When you do get these moves down, when they're quick like that, that's because there's liquidations that help force the price down. Then as they get down to these levels and the support comes in, the positions are opening up, bags are getting filled, they start to push out. When we zoom out, we can see that this was a bit of a three-pronged attack. So we hit the high back here around the second week of Jan at 49K. First leg down, consolidation. Second leg down was only a short one, consolidation. Third leg down, and now we're getting a bit of a reprieve. So we do have the monthly close coming up on Wednesday, which if you've been following what my thoughts are, this 50% level is extremely important here. I want to see this close below, and not by $1 or $2, like at least $100, and convincingly across all charts. I don't want to see some charts getting above, some charts under, because it just brings about a lot of uncertainty. We had that with the yearly close. Some charts were closing over, some charts were closing under. I'd like to see them all closing under. And it's not because I want to see lower Bitcoin prices. It's just I've done a lot of research and put in some effort into working out what has happened historically, which helps my analysis for what I can expect to come. And that would be affirming my analysis of what I have been expecting to come. If it does close above, I'd like to see it close above on all charts. I don't want to be in an indecisive. I don't want to see the charts in an indecisive state again. And if it does close above, then I'll be looking to see how high does it close above. Is it just a little? What happens after the close? Do we come back down? Does February close above the level as well? If we're getting consecutive months closing above the level, then that would deem the analysis invalid. It's almost deemed invalid with a single month closing, but you want that confirmation in a macro sense for a couple of months. Is there still some more downside to come? I think there is, based on the fact that we shouldn't be closing a month above this 42,200 level for a few months yet. So I think we should expect we can still play to the upside. I think that the upside plays are going to be in the earlier parts of the month, similar to how January played out. The first 2 weeks saw us doing this up here, and then we sold off. I think we should expect a similar sort of play. I don't think we'll perhaps go as high. Maybe we could get to around 45K would probably be the limit, I would say, for an upside before we sold off. And to the downside, I'm struggling to see us getting down below 32K. So we're going to be it's a big range, but given where we come from, it's still very, very extremely bullish. Like 5, 6 months ago, we were only dreaming of getting above 32K, and now we're up here, and we're dreaming of. There's a lot of people out there that are dreaming about getting back to 32K. And it's interesting how the psychology plays a big role. And then that there was quite a number of people when we were back trading between 32K and 25K. They were saying, "Oh, I'm not going to buy until we're at 20K." And now those are the same people that are saying, well, "I'm not going to buy until we're at 30K." And so their targets keep moving up, but they're too far out of reach. Yeah, it is still likely, or not likely. There still is definitely a possibility we get to 30K for Bitcoin. I don't think we're ever going to see 25K again in this cycle. So I'm not prepared to say that about 30K just yet. However, I do think it's unlikely that we get down there. And we can jump into some alts, perhaps. We'll have a look at NIA. So NIA almost came down to the 618 level, as I discussed last week. I'm not sure if it was on the public or the premium, but I did talk about it last week. This below the 618 is my buy zone to get a spot bag starting up. We haven't got there yet. I'm still persistent. I'll still be persistent in this conviction that we're going to get down there. It did have a nice bounce though out of this $2.45 area. Straight up, a little consolidation and then an uptrend ensued. But we are starting to see it starting to roll over as we have the new week starting. We do know that weekends are typically for pumping. And come Sunday night, we do start to see a bit of a sell-off occur. So we'll just see how this sort of plays out. It is one that I'm very keen to get a nice bag of, though, NIA. I think the fundamentals of NIA, and I don't really talk about fundamentals too often, but I do quite like the fundamentals of NIA quite a bit. The token's already fully dispersed. There's no unlocks to come, which is great. So you're not going to be dumped on necessarily by token unlocks. And they got a high amount of transactions on chain. I think a lot of them are very minor transactions, though, which it sort of does inflate the numbers a bit. But nonetheless, for people looking in, they can see all these transactions, and the uptime of NIA is really good. So it just goes to show that it can handle the volume, which I think is quite critical when you're looking at layer ones. We did see with Solana, not so much recently. I think they nearly had 12 months of uptime, but prior to that, they had quite a number of periods of downtime or congestion on their chain. And we're just not really seeing that with NIA. I think there was a little bit of congestion at the start of December, but the chain was still operating. So I think there's a lot of room to grow here with NIA. And when I'm looking at these tokens and layer ones, etc., I'm looking at what is it going to do for me from an investment standpoint? What's the risk reward? Like is getting into Solana now at $90, $100 a good idea? I don't think so. Excuse me. The market cap, I'm only sort of guessing here or using rough numbers. It's around $80-90 billion, I believe. Whereas something like Nia is sitting at around $3 billion. So there's a lot more upside potential to some of these smaller layer ones than what there is something like Solana. I do like Solana, don't get me wrong, but from an investment standpoint, I struggle to see where the risk reward. I struggle with the risk reward of Solana as an investment at this point in time, in comparison to something like Nia, or even you can look the other way and look at something like Ethereum that is vastly bigger than Solana. I'm not really one to be. I'd prefer to put more money into Bitcoin than I would Ethereum. But if you are looking for a bit of a safe haven in the alts, I'd probably be looking at Ethereum over Solana at the moment. There's a lot of hype there, and I think Solana still has some pulling back to do. We'll move on from that. So we'll look at the fan favorite, in that being Sweat, and we can see my little purple box has been working pretty good. If you're looking to add to your bags, doesn't spend very much time in this purple buy zone that I highlighted a while ago now. I think it was back around the start of January, end of December. I identified it as a key level. We're seeing some strong pushes out. Like this one was massive. We went from the bottom of the channel to the top of the channel in a single 4-hour wick. I think it's even on like a 15-minute wick or a 1-hour wick. And a massive pump. And we're coming back down again, hitting the buy zone, bouncing back out. As long as we don't lose these lows, I think it's easy to say, as long as we don't get below 0.009, it should be just moving along nicely. We don't want to be getting any significant closes outside of the channel either, because that would also suggest a bit of a breakdown maybe occurring. But at the moment, I'm not worried. I think this is great if you're looking to add to your bags. Even just looking at the volume on that big spike, it was the this is on Bybit perp charts. The volume was larger than the pump up to the highs at 1.5 cents. It's actually nearly twofold. So that's really, really good to see. Because I don't believe that there's a lot of open interest on Sweat, so I doubt that this was like a liquidity grab, or a run on shorts as such. I think that was more so probably driven by an accumulation of Sweat. With that, I think that'll probably draw us to a close for today. Take care of yourself, and if you want to join the public catch up on Wednesday, feel free to do so.